Hi, guys, and welcome back to another episode of the DAI Dispatch. This is a show where each week we bring a founder in the decentralized artificial intelligence space and unravel their product. I'm excited because on today's podcast, I'm joined by Ryan, who is the co founder of Orbit Crypto. Orbit is building one of the first DeFi abstraction layers. So, put simply, it's a product that allows you to interact and use DeFi in a lot more, in a very simple way. DeFi for folks who are aware, it's a very complicated space for a lot of regular users, and so products like Orbit can make it really cool and simple for you to engage with this wonderful world of alternate finance. And so with that, I want to welcome you, Ryan, to the show. How are you feeling?
Thank you.
Welcome.
Thank you. Thank you. Glad to be here.
Awesome. So yeah, I want to first dive into from the very beginning. Let's start with your background, Ryan. Why don't you introduce yourself to our audience?
Yeah, so I'm Ryan. I'm one of the co-founders of Orbit. We've been building this for over the past 3 years, so we've actually been building for a long time. But my background mainly, I guess, like I could start off at the beginning. Both my parents were entrepreneurs. My mom had her own architecture firm. My dad was actually the guy who built the first airbag switch in the automobile. So the thing that kind of turns off the passenger airbag if there's a kid in the front seat. Um, he did that when I was a little kid. And so kind of growing up around that and seeing everyone be an entrepreneur, that was kind of my natural path. After graduating college, got into crypto in 2017. And essentially, I started off by building a Bitcoin trading bot that combined a LSTM and reinforcement learning to automatically trade Bitcoin. That did really well. And then after that, I did another AI startup. It was called Apply All, which essentially used NLP to automatically apply you for jobs that you were qualified for. So I would look at your resume and your job description. And essentially, if you say you wanted to be a software engineer in New York City or something, I could look at all the jobs in that area and then effectively apply you for all of them that you were qualified for. Um, After that, ended up going off, leading some different engineering teams, moved to Austin, met my co-founder, Chris, ended up starting this, and that was 3-ish years ago, a little bit over 3 years ago. Um, and met Chris through a friend of mine that I went to school with, but it was a coworker for him. And yeah, we've been kind of building and growing ever since. Started off at a hacker house in Austin, mainly doing cross-chain payments, and ended up iterating into agents well over a year ago before agents were even a thing. So kind of used, both of us came from AI backgrounds, used that AI background to see if we couldn't do something there. I essentially distilled our engineering process that we were doing for cross-chain payments and turned that into an agentic workflow in which that actually outputted another agent. So it was agents that made agents. And that's how we were able to scale to 117 chains and close to 200 protocols.
Interesting. That's quite cool. And so this is not something that you kicked off right at the heat of the meta in September, October, when a lot of projects who saw these AI coins kind of pumping like crazy and then announcing their projects, right? So this is something that you've been working for quite some time. Let's kind of rewind a bit. You said you were working on a cross-chain payment solution. Um, talk through your early journey of figuring out, okay, this is an interesting space to build, and from there on, what were your biggest learnings in terms of okay, this is interesting but not big enough for you to kind of continue working on in terms of building a standalone solution, and so you know uh, eventually kind of moving into building Orbit. Like, talk about that journey.
Yeah. Yeah. So a long time ago when we first started the company, the main reason I got back into crypto and what I really liked about it was a groundbreaking technology that felt like it was inaccessible to many. You have to have effectively a PhD in crypto to use this stuff, right? And it's like really, really amazing technology. And so our old catchphrase or slogan was "We're making crypto for grandmas," and so the
Mm,
idea behind doing a cross-chain payments platform was to just make it as easy as like a one-click checkout. And so we incorporated, I think it was 18 chains at one point
mm.
in order to do this, and it was EVM, SVM. We had some Cosmos requests and stuff. It was just a lot of work.
Oh, wait a
Um,
second. 818 or 80? 18 or
1-8.
80? Hmm.
18, 18. We had at our peak, I think it was like we had 40 chains in our backlog. So that was kind of where we got into the agents part. But
Hmm.
in the early days, like most of our stuff that we were very focused on as a company was financial accessibility and like essentially trying
Hmm.
to enable people to use crypto as a actual like financial platform, not something just like for speculation or whatever else it may be. And where you have to, we really wanted to drop the barrier to entry. Me and Chris did a
Was
cool TED.
Well, I'm sorry, please go on. I just
No,
wanted
no,
to
go
ask,
for it.
was this mostly around, because you mentioned payments and people are looking for a stable currency to make and receive payments, right? Because I think
Mhm.
it's mostly around, it's either trade, right, or commerce. And so to do something like that, you need stable currencies. So was the product primarily predicated at making it easier for folks to exchange stable coins? And if yes, so why did you feel it was important to be, multi-chain or cross-chain, and just not choose the cheapest chain which has, you know one of these stable coins available which has wide distribution, and then go with it?
Yeah, so we did have a large focus on stablecoins. We essentially, since the beginning, we did it early on. We did a TED talk at MIT and spoke there. Me and
Mm,
Chris did, and that was mainly about like financial inclusion and accessibility. And so that was kind of like, if you ever watch that talk, it's like kind of more or less like our ethos of how we started the company and why we did it. Um, and Stablecoins was a major focus. The idea behind being multi-chain was that it seems like to me, and it's still kind of like this today, in which that most of the liquidity is like fragmented,
mm,
and so you have people who are maybe more or less like tribal, and they'll pick a chain that they like, and they effectively will place funds there. But it's like I feel like in the Web 2 land, right? It's not like my credit card or my bank account doesn't work well with like Wells Fargo or Bank of America
mm,
or whatever in the States, right? It's not like it's like, Visa only here and then MasterCard is never accepted. And so I feel like in order to actually bring in a wider audience, it needs to feel more like all chains are one chain kind of
mm,
thing. It's kind of how I wrap my head around it. I think there are definitely like, um, when you look at something like USDC, it's not on every single chain. So, those chains are predominantly very important that you support the chains that like USDC supports. Same thing with like USDT, they're not on every single chain. So, same kind of thing as far
mm,
as native assets go. But yeah, I think that was the main focus. And then what kind of ended up iterating later was we had a larger focus on like custom like ERC20s or SPL tokens, and kind of where my vision kind of iterated or changed was I kind of saw like, if everyone, and I still believe this, like I think it's like I think stablecoins will be phase one where a lot of people will probably interface with it and do good payments and things like that. But I think in the long term, I think you'll have tokenization of practically everything. Like I think if there's good like clear regulations and a good pathway, I don't see why someone like Starbucks wouldn't just do like a Starbucks token as opposed to having like their own individual bank accounts for each person, and then they could have like a financial asset that they can maybe borrow against one day to fund future company endeavors, and then that would be the token. So you'd have like stock plus token. Is kind of how I could see like a world shaping up, and you have a much more you have a financial asset that's closer to the actual like velocity of revenue. So essentially, if that's used inside the stores to purchase coffees or do whatever, you can see that go up or down based off of like the coffee demand for that day. And then you could speculate on that if you really wanted to go that route. But I just see that being like a very interesting world in which you could live in which you kind of like this like credit card points that kind of expands everywhere, and everyone has their own
mm.
version, and that becomes kind of more or less their token. There's some utility and stuff there like perks or whatever, but you can also have a closer relationship with your customer. But I kind of saw that like evolving. I was like, oh, well, we should also support custom tokens as well.
Hmm. Okay, so building this payment layer cross chain, trying to make sure people have access to not just stables but a wide range of tokens that they want to use in their endeavors. What happened then? What were your biggest learnings, and at which point um, did you realize that there's a need for something that you've built now, which is Orbit? Walk us through that journey.
Yeah, so the main thing we ran into is just when the L2, L3 roll up as a service stuff started coming out, and that was like really, really hot. The number of chains that were being built per day was far outpacing our engineering capacity to go and add support for them. And so
Hmm.
we end up with like 40 chains in our backlog of, chains that people wanted us to go off and support. A lot of them were L2s or L3s or whatever it may be. Some were like Cosmos chains and kind of like these one-off things, but um, it was just a really large task. And for us, it was taking us about a month at the time to scale to a new chain. So what ended up happening was I actually just looked at our engineering process. I said, oh, why don't we use like some of these new things like the LLMs or agents or whatever to actually automate some of our process here? And I built out an early prototype in like a few months, and that was like late 2023, I think it may have been late 2023. I have like an old video I showed the engineering team, but essentially it changed our engineering timeline from 1 month and costing however many thousands of dollars for headcount, doing research, finding the best DEX and bridge to integrate this chain, to effectively 10 minutes and $10. And since then, the
Whoa.
cost curve has just like gone down significantly. So
Hmm.
and now we're at a point where it's like the 117. We really haven't had any requests for additional chains. We can add them. Like we have some new ones and stuff like that, but we're kind of like, that seems like plenty, kind of thing. So we're that was kind of the journey there, and that's how we ended up getting into agents. And then it turned into like the first version was that code that was built out of that agent workflow ended up needing to be injected into our existing code base. And then I was like, well, why are we injecting this into hundreds of thousands of lines of code and trying to effectively place it and like place the key in the right keyhole, right, if you will. um, it seemed like a really bad idea from an engineering standpoint, because it was like a lot of
Hmm.
the time then turned to, we have this great integration, but then how can we package this and then place this in the existing code base correctly? So the thought there was like, well, what if we just switch it and we turn everything into like these very modular components, and then each of those components are just an agent themselves, and we create like effectively swarms of agents, and we figure out how to coordinate with these agents to self-assemble based off of what the user wants to do. And I thought that was a better engineering route.
And
um,
was that still related to the cross chain payments protocol that you were building? Like, was the primary use case of these swarms for essentially to enable these cross chain swaps from happening and to integrate all the chains? We still didn't get into the DeFi abstraction layer territory
yeah,
when
so
that was
what
happening,
happened
right?
was, yeah. So we did that was mainly for all payments, and then
Hmm.
it was just like, well, we could even do some more here. Like we can have, and we started seeing more success on the actual use of the agents to help with DeFi, as opposed to like just purely payments. Although there is like some payment stuff we can do and stuff like that, but like we started seeing more and more people have requests around like, well, hey, this would be really cool if I could automate X, Y, or Z with these different protocols.
Hmm.
So we sought to do that, and like what happened was we released a very early version of this, and we called it Surface Area. And Surface Area was effectively just, it was pretty much, it was Orbit, but it was just branded more towards like DeFi natives kind of thing. And what we've been doing and what we have seen over time, and that was like over a year ago, well over a year ago when we released Surface Area, that came
Hmm.
out with a lot of the original support that we have today, like the bulk of it. And what we found is that like over time, people want more and more abstraction versus much more granularity. So we just continue to move more and more to an abstracted layer and abstract more and more, versus like being much more granular and having to say on this
Mm.
chain and this protocol do X, Y, or Z. People want much more abstraction.
Yeah. Just want to go back because you spoke about the TED Talk and the idea that the goal is to create a solution or create ways that you can make the world more financially inclusive, right? That crypto is a technology that can fundamentally make that happen for the first time. I was reading a report somewhere that 50% of Mexico doesn't yet have a bank account, which is so crazy to
Yeah.
think about in the 21st century, right? Also true for, by the way, India, where despite we've taken immense strides in financial inclusion and, and digitization in the last couple of years. I don't know if you know about the unified payments interface and these new technologies. Virtually 99% of transactions that happen in India today on ground are all digital, right? So I can do a micro payments to you. Let's say if I buy, 1 kg of, I don't know, potatoes from a vendor, a street vendor. I can literally pay him with a QR code right on the spot with an app on my phone. And this is now so well penetrated in the market that everybody uses it. Despite that, there's a large chunk of our population who still don't have a bank account. And so I realized like there is a need for that, which is quite interesting. And I want to bring that idea of financial inclusion back into what Orbit is doing, or that transition that you were doing. Was this is this was that still the goal or the end objective that you were trying to achieve with all of this abstraction that you were creating? And a follow up to that, or a side question to that is: are the users predominantly non crypto native folks who are using DeFi or stuff for the first time, and so the demand for abstraction, or is this coming from core DeFi native users who've been in the space for the last like 4 or 5 years?
Yeah. So from the financial inclusion aspect, yes, that's exactly like the idea, and why I like crypto is kind of
Hmm.
on that premise. So like we always are kind of trying to build for that, and then enable access. Like it's just a to go from even like a centralized exchange into like an on-chain, DeFi stuff. It's a hurdle. And then like moving the funds is one thing, but then actually like knowing what to do when you're there, I think is the next thing.
Hmm.
So, and to my mom and the people around me, a lot of them, when I talk about crypto, they just think of like Coinbase, and they think,
Hmm.
oh, okay, like I'll go buy some Solana, or I'll buy some Pole, or I'll buy whatever. And they just think, okay, I have the asset, I'm good. And it's like, no, this can be used for a whole bunch of stuff. Like, like
Hmm.
that hasn't like really, that's not really registered yet. So really what we're wanting to do is increase that access, and drop those barriers to entry, and help them like automate transactions on chain. So yeah, it's all of our stuff that we've always built is kind of in that persona. For users that we're seeing today, we do have a decent amount that are existing DeFi users that come in, and that was kind of somewhat surprising to me.
Hmm.
We've had like, we've had some very interesting people that have reached out to me that essentially, because we support all these different chains and we have all these different protocols underneath, we kind of became like this like super aggregator, if you will.
Yeah. Yeah.
So some people were like, oh, I don't even know how to go from this chain to this other chain, and they just used us to do it. And it
Hmm.
was like, that's kind of cool to like hear that from folks. um, and they were like DeFi natives, like working at like large DeFi companies, um, so we've had some cool things like that. We've also had people who have like come on chain that have never used any of this stuff. Um, some of the things that we're focused on for like our V2, we've talked a lot about V2, is mainly much more abstraction and then automation. So a lot of people on our platform today want to automate transactions, or automate like staking or lending, and get like yield off of their tokens. We're wanting to lean further and further into this like automation, so you have kind of more or less like a, like not really like this, but like kind of like an automated wallet. So like if your funds are idle, you're effectively making money on those funds. So maybe it goes into like staking or lending or something like that. But we
Yeah.
do it in a self custodial way, which is really cool. So
Yeah.
we're trying to like make it where we have the best of both worlds.
Hmm. Okay, I now want to go into Orbit and the product in itself, the DeFi abstraction layer. I would much rather describe it as a DeFi super app, right? an easy way for me to access all of these new financial primitives. Um, but it's interesting. I mean, first explain to me what this product is in terms of its entirety, right? What kind of DeFi actions are we talking about here? Is this limited to any specific types of transactions, or is it open to an oil? Is this non-custodial? Do I still own my assets and tokens? And if yes, because you support so many different chains, like how does this work? My like the fragmentation is still there, right? So how does Orbit solve the challenge of this fragmentation and management of my portfolio of different assets, which now perhaps is spread across 100 different chains, right? So walk us through the product a little bit, how it works, what it is, and how does it solve for fragmentation, management of assets, and self custody and security.
Yeah, so that's a lot. I'll try my best. If I go off
Of
track,
course.
just put me
We'll
back
bring it
on.
out.
um, so I kind of explain the platform as like a super super simple. If no one's ever been into like DeFi, I just say like a Chat GPT for Web3 kind of thing. Like that's kind of
Hmm.
how I explain it to my mom to help like
Hmm.
automate on chain transactions. So we have like a chat interface that allows you to interact with 117 blockchains and close to 200 protocols directly from the chat interface. Um,
Hmm.
the product offers like a wallet set that works for EVM and Solana. That's a self custodial wallet. We kind of
Hmm.
use the agents to blend those wallets and there's balances together. So we did a really cool USDC agent that allows you to have balances on multiple chains and
Hmm.
effectively combine those balances to do a single payment. And so it feels as if those chains are just one balance, which is pretty cool. Um,
Wow, that's cool.
yeah, I was super excited about that one. What am I missing? I think I
Yeah. Okay, so it's a chat GPT interface, right? I go in
yeah.
there and I just write a command. Let's say I want to buy, I see a new shiny token on Solana, just launched on Pump Fund. And so what do I do as a user? I just go, it's an app, it's an interface like chat GPT, and I just type in a command and then boom, it does a transaction for me. Is that how it
Yeah, you
happens?
could just say swap whatever token into this token, and then
Yeah.
we'll present like a little preview, and then you just say,
Hmm.
yeah, I would want to do the swap.
Hmm.
But we support swaps, bridging, staking, lending,
Hmm.
like so
Hmm.
depositing withdrawals from lending and borrowing.
Hmm. Hmm.
Uh, we also support liquidity pools, so you can do that across like we have it for like quick swap,
Hmm.
and so you can actually like have an automated like agent help manage that to like
Hmm.
automatically move to the best pool and then
Yeah.
like reinvest any returns you have. So you have like some cool features there for like doing LP. Um, but a whole
Hmm.
bunch of stuff. I mean, we kind of have like a wide range support. Most of the interest that we've had recently with the recent market downturn has kind of gone into not just like in agents and stuff, but more broad market downturn with the meme coins is like kind of much more conservative approaches, staking, lending, that type of stuff. And then
Hmm.
prior to it, it was much more like how do I do meme coin trading and get things in there. And we support both sides of that. And
Yeah.
what we kind of classify as like the middle is like doing like liquidity provisioning and stuff like that.
Yeah. I feel like now being in the space for almost 4.5 years, it's not just that a big challenge to onboarding is literally education. If you tell your mom that, hey mom, do you want to stake like your ETH? I don't know how she will, what the takeaway would be from a statement like that. And that is true for pretty much all of this jargon that we use in DeFi. I mean, banking people know, right? I am investing or I'm depositing and I'm getting a yield or a rate of return on, I don't know, my fixed deposit. Or if I buy a stock, right, and I hold it, I get an appreciation or I get dividend. So those terms have been in use for like 70, 80, or almost 100 years. People are aware of it, and so it's not a challenge for new folks getting in to start in the traditional banking space. But when it comes to DeFi, there are these liquidity pools, there's mining, there's staking, there's now restaking. There's a swap. I don't know why we call a swap. We're just exchanging an asset. We're just selling an asset for another one, but for some reason we want to call it a swap. So there's a lot of these words. And so do you feel like just having this interface that allows them to type solves this problem, because they ought to know what they want to type? How do you get to a point where I've given you, a tablet where you can type whatever, you still need to learn the language of communications, the syntax.
Yeah. Yeah. So that's what we kind of found in a recent iteration is exactly that, is that like, the chat interface is very helpful for people. And we do have like a educational component and a researcher component, so we can help there.
Hmm.
But like what we're really moving into for V2 is much more on the automation side. So they don't actually have to understand staking versus lending versus all this like nomenclature or like acronyms or whatever it may be. Um, and really what we're doing is we're asking the user, like, what is your risk tolerance? And
Hmm.
so we effectively are trying to assist the user in that direction. And then
Hmm.
when they can do things like, oh, they want to pay somebody something, right? We could then trigger something like our USDC agent that then
Hmm.
combines balances. So what we found is essentially uh, we abstract it and we think we abstract a lot. And then it's like, oh no, abstract more and then abstract more. And then it's like, okay, so I'm thinking V2 will be a much more abstract experience and will
Yeah.
allow people to have what they want. But
Yeah.
it's definitely been a
I
journey.
feel like the ultimate abstraction is going to be I go to the platform and, hey, do you want to save? Do you want to invest? Do you
Yes.
want to grow? As
Yep.
simple as that. And when I click on that, it shows me a bunch of different options. Takes me through some system that allows me to communicate to the system what my risk tolerance is based on my income, my age, my nationality, or whatever other parameters are important, and then automate the whole process, right?
Exactly.
And intelligent automation, which is what I want to talk about next, because automation was something that we could already do. Bots have
Hmm.
been in place for the longest time, but I also want to know from you, how do these LLMs and different new intelligent agents that we can create as a result of these reasoning models allow you to do better automation? So talk about that as well. Like, what's the new automation that we're talking about versus the bots that were already there for the longest time?
Yeah. So I think like kind of how I look at it is the original thing that I really liked about them, and this is much more like technical, was like the agents are far more fault tolerant. So when we were doing the cross chain payments kind of solution, um, like if you let the compute run, so like right now we have some limitations on what we do like on the actual front end for the user experience today on our platform,
Hmm.
but we just let it run, um, then effectively it's much more fault tolerant. It could go back, retrace its steps, identify what protocol to actually use if this one is not a good protocol to use, alternative routes, that kind of
Hmm.
thing. um, that part I think is very interesting, but that's really more or less like the highest level is like the reasoning capabilities. Like you effectively have like a really intelligent thing sitting there and just watching and says, here's all your tools. What kind of works for this? And if you automate stuff like we're in this next version, we'll have like a meme coin trading agent that is far more powerful than what we have already released. But in that one, it's like if your risk tolerance is high and you want to just do like something where it's like growing or whatever, uh, you effectively will ingest like in each iteration it'll ingest 50 to 80 data points across the crypto space that are like both on-chain and off-chain data to then assist you in what you want to do with that meme coin trade. So it's like that's kind of I think where you can have consumption of data that far exceeds what most people can do like in a minute. That's one piece. And then reason upon that data and identify what the next step would be based off that data. And that kind of goes across like not just that example, but also like the payments or whatever else you want to do.
Can you talk about some practical use cases of this, for an average user? Let's say I have $10,000 worth of ETH today, and my primary goal is one, safety of capital. I don't want to lose my principal, and then I want to make a sufficient rate of return so I cover inflation and plus up, let's say. And I go into the platform. How does this then come to my use case and help me preserve capital and earn, let's say, a 12% rate of return over the next 3 years, for instance?
Yeah. So our goal on the V2 is essentially if you came into the platform, we're first trying to identify like what your risk tolerance is. So it's kind of like what you talked about, like effectively like something very stable, earning or growing. So you have kind of like this like paradigm there.
Hmm.
Um, one of the things that we're effectively trying to identify too is like what I like to call like this like evergreen mode. So we're kind of like testing this out and identifying like a people like this, which more or less, I think, came from like Sequoia Capital did this, where effectively they have like the base principal, they get investments, they only invest like the returns because the fund is so large. So you always maintain your principal, but then the excess is actually used for other things that you'd want. So like meme coin buying or whatever you want to do there.
Mm-hmm.
So um, that's kind of where we're focused on with that. Inside of the like practical use case, we would say, okay, hey, if you want to be much more conservative, here are like three different options here. And what we'll look at is that on a daily basis or hourly basis, if the rate of return for staking changes and maybe you're getting 3% there or 5%, and then it changes to where lending the same token is actually 7%, then we'll effectively say, okay, like that's in the same category. You'll then essentially will move it over to like lend that token. So you go from like 5% or 3% to then 7%. And we can then effectively help you get the best rate of return while still maintaining like a much more conservative risk tolerance. So those are like effectively like categorized and then limited. If you have something that's much more like you're more risk tolerant, you could do something like liquidity provisioning. So you effectively would then provide liquidity to something like QuickSwap, and then you would say, okay, I want to monitor for impermanent loss, and we'll automate effectively like a liquidity pool for you. So you'll have like effectively two pairs or a pair, and then we could say, all right, we're going to move this up or down based off of like what the price range is, and automatically rebalance, and then reinvest any returns. So you could do stuff like that. And then the final thing we're kind of focused on is meme coin trading.
And so all of this is abstracted away from the user. It's happening through the agents, and they're figuring out what's the best way to achieve all of these differentiated goals based on what my ask was. Is that
Yes,
correct?
so
Mm.
that's effectively what we're focused on in V2. Right now, the
Yeah.
user has to decide all this stuff. And what we found
Mm.
was that like we had a and cut me off at any time. Like I just ramble on this stuff, but feel free to cut me off anytime. But the we had this one agent we had, it was like meme radar or whatever. So a lot of people liked these like Twitter agents that we had, and they wanted to
Mm.
automate on-chain transactions based off of what these Twitter profiles would say. So the agent could ingest the tweets and say, okay, I want to buy X, Y, or Z token because of that.
Oh, this is
And
cool. So it's like if I am a KOL writing a lot about tokens on traded tokens, then this specific agent basically takes extracts the data from my tweets and tells you or the agent what are those what are those interesting tokens that I am
mhm.
basically asking folks to buy or inform them about or educate them about, and then I can create some kind of a buying strategy from there as well. Interesting.
Exactly, exactly. So people really liked
Mm.
that, but in order to like set that up, in order to do like an automated like trade process, it's a
Mm.
little bit more complex. You have to set up like a scheduler in our platform. You have to then set up like
Mm.
what you want to do because of that. So it becomes like
Mm.
much larger. And so the barrier to entry was first really low because you could like grab the Twitter side,
Yeah.
but then the next thing is you start amping it up because you have to effectively sign up or set up all this other stuff behind the scenes.
Mm.
Um, so we have like effectively for V2, it's like much more abstracted. And we're trying to abstract more and more and more. And so that'll be like kind of more or less included inside of the meme coin trading agent portion.
Hmm. 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 Can I ask you, why did you decide to name your token GRIFT?
Yeah, yeah. Um, so it's kind of really it's kind of honestly really dumb. But what happened was we had when we first launched the so we had surface area, and
Hmm.
surface area was um, literally like uh, it was a very it's pretty much the platform we have today. So it was like, but it was much more technical. So we show all the protocols we support today and all the chains we support. I think if you scroll down to the bottom of like the agent page, you hit show all, it'll take you to another page that has all this stuff. That was what surface area had before, and so just all this stuff was there. um, and what happened was we effectively rebranded surface area and turned it into orbit. And in that rebrand, some of the things that were going on at the time were a lot of people had these like personality agents. And
Hmm.
so we thought, oh, we'll add a personality to like our agent. And what
Hmm.
we thought was like, okay, we'll have the personality be a lot like Bender from Futurama, if you've ever
Hmm.
seen that.
Hmm.
Well, then we used the agent's personality to then create the token symbol. Um, so that was like essentially how we got to
Mm,
GRIFT was, so that was what the agent said to do. And what it allowed us to do is we avoided a lot of snipers like on the actual launch. So the launch ended up being quite good because of that. There were some missteps and we did some things that were not maybe like super perfect. We were trying to like unveil the token symbol or something, and there's some things like that, we're not super
mm,
great on that. But like
mm,
the actual like launch itself for the distribution, we had really good distribution across the board where it wasn't like someone sniped 30% or 20% or something like that, because we did a pumped up fun launch. So it was like people can easily do that. But that's how we got to Grift. And then what we've effectively done is like that is now turned into like an acronym. We have that on our page, and then we're trying to essentially like that is our token. So like we're not going to probably get rid of that token, but it's like we're now turning that into an acronym. There's probably going to be some stuff coming out with that, but that's how we got to Grift. It was just a very basic story that the agent named its own token, and the token name was something that was there. And then after we launched the
mm,
agent, everyone was like, "I hate this personality."
mm.
So we yanked the personality. It was a good
Yeah.
learning, but it was like
Uh,
we yanked the personality from it, and then now everyone's like, if they see our project now, they're like, "Why is a token named Grift? You guys are like a legitimate project. You've been building for years. What are you doing?" It's like, well, that's how that happened. So,
yeah.
um,
You know,
and
I,
it's
I I didn't buy your token for the longest time just because I was like, what's this?
yeah, we get that a lot. Like it's definitely kind of stinks from how we're at on that. So we're
Hmm,
definitely going to be doing some things to try and adjust and try and do better there.
hmm, hmm,
Where the name is incorporated more, maybe an acronym is there. So we're working with some folks to try and figure out a better acronym, some things there.
hmm, hmm.
Um, but it was funny. I think in our Telegram chat, someone said something like yesterday that like when we were at like when the market was much better, no one cared about the name of the token because
Yeah.
our project was super. But then when it goes down, people then are like, "What's the name of the token?" And it's like,
Yeah.
I don't know. So
Every small nano inch of your project is
under microscope,
analyzed and commented on under a microscope. Exactly. So
yeah.
that's the beauty of what happens when the price goes down. Okay, I want to go back and talk about Sphere One for a bit because you mentioned on your Twitter handle Orbit Crypto built by Sphere One.
Mhm.
And so I'm looking at Sphere One handle right now, which says providing decentralized AI infra to enable the creation and operation of autonomous AI agents. Is this like a separate protocol? And so is Orbit like a use case built on top to showcase what this protocol is or the solution is all about? And as the end game to kind of get into the infra space and sell this as a solution to other devs as well? Talk about this
So
relationship between what Sphere One is and what Orbit is, and where
yes,
your focus and efforts are as a business.
yeah, so all of our focuses are on Orbit. Effectively, Orbit is the product of Sphere One. Sphere One was just
Mm,
what we had originally as the name of the company, and then we thought through this agent process that we would have Orbit will have its own account because a lot of the agents were like effectively tweeting things out and all this stuff. So we went to do that route. We've definitely like pulled back from a lot of the automated agent portion where it tweets out stuff. We then sought to bring it back, and then some people were like, "Oh, I don't really like this," so we just removed it. And so effectively, it's kind of through this process been kind of confusing. But really, Sphere One is just the parent company of Orbit. Orbit is the
mm,
product. Orbit has all the stuff there. Our plan is, and we announced some plans around this. We've had close to 300 different companies sign up for this stuff, which is pretty cool. But effectively, using Orbit to power your system. So if you're an agent and you want to monetize your services, you can do that through Orbit. If you want to do cross-chain payments across like 100 different blockchains, you can use Orbit to power that as well. Um,
Oh, so it will become like a marketplace for agents as well, where if I'm building an agent which is great at quant trading, I can introduce it to the users of Orbit AI and make some money in that process.
yeah, the idea behind it is that Orbit can help coordinate and monetize your services. So if you're doing like an agent to book flights, you can like effectively have that in there. Because how I view it is that
Hmm.
right now, I think people look at like you have like Web 2 and Web 3, and they're kind of two separate realms. I think what will happen is that when agents become extremely popular, um, it'll turn into like crypto is a necessity to enable that. like commerce to actually happen through micropayments. And you're going to have like a lot of people build agents, and they'll have wallets on like fragmented places. So like some will be built on some chains, some will be built on other chains. And
Mm,
then like if there are we're already seeing this now, but it's mainly on like the engineering side. You have lots of agents to like do different things. If
mm,
you want to monetize those services and say it's like $1, uh, where does that agent's wallet sit? And like, are they only accepting $1 on maybe like Polygon? Well, what if your person who wants to buy your service has money on
mm,
Solana? It's like, well, now you
mm,
got to figure out like, does that company need to then implement a cross chain bridge and all this stuff? It's like, that seems kind of ridiculous. So Orbit can sit in front and say, hey, like, we'll effectively help you accept funds from 117 chains by leveraging, one of the or multiple of the 200 close to 200 protocols we support, and then you'll be able to monetize your services a lot easier. So that's what that's
mm,
kind of set up for. And when
mm.
the agents have kind of picked up, it's also been there.
Yeah. I'm also curious because at the end of the day, each of these different protocols are individual businesses by themselves. And so when you take in the role of a super aggregator and you control the funnel of users and where the transaction goes, like which swap protocol you use, for instance, that's where the volume goes. And so if you choose to go with, let's say, Aerodrome over Uniswap for a transaction, for a trade or a swap on base, does that create like a challenge for you to manage relationships with these protocols? And I'm just curious because I'm not choosing anymore. I am just making an intent that I want to swap X token for Y token, and the liquidity pools exist on multiple different dexes. And so how do you make that choice? Is this something to do will, will at some point in time this will be also monetize that? Hey, if we get more revenue coming, if we get like some kind of a fees coming in from your protocol, um, I'm going to route more transactions to you versus that protocol. And do you see that those conversations already happening, or is this something which is not important at all?
We have had those conversations. We're trying to figure out how to navigate it. I think we're in an interesting
Hmm.
place by doing this. Like right now, I don't think that we are where I view we will be in the next year or whatever is like in a very short time period. Is that this is a very large opportunity. I think this is actually what enables people to use crypto and then um, turn it into a much larger thing than what it is today. So I get very excited about what we're building. I think with that, there's a lot of responsibility on our shoulders to make sure we're providing the best thing for the user, and we're not effectively trying to then make sure we pocket the most. Um, so that's where my focus is. Like I'm trying to make sure that what we do is providing the best experience to the user, and not necessarily that it makes sure that we make the most money. I think if we effectively do our product right, by doing that service and focusing on the best service, like effectively just finding and identifying the best route for people, that over the long term will actually make it where we make more revenue. So that's at least like Chris and I's like thought around this is that like we want to make sure we have things on our platform in which it's the best bridge, it's the best dex. It's not that it's like the best revenue generating dex or bridge for us. And how we're looking at monetizing the services will be much more of a it's more focused on automation. So like in those automated transactions, we'll take a percentage there, and then
Hmm.
we'll have token gating for like effectively larger, higher, more frequent use stuff.
Hmm. Hmm.
So on that, but I think
So,
that
so, so tell me this: like, what's the need for then to have 200 plus different protocol integrations? Because we know on base, like 80% of all volume, swap volume, what is probably captured by our Aerodrome and Uniswap. I think similar stats for other chains as well. Like the top 3 or 5 dexes, the top 3 or 5 lending protocols, the top 3 or 5, staking solutions. They pretty much have all of the market share. So can't
Mhm.
I just won't you be able to provide the same quality of service by actually integrating with only a 20 or 20 does 20 odd protocols across maybe the top 50, 20 50 100 chains, whatever it is, and offer the same level of service? What's the value proposition behind so many number of integrations and protocols where
Yeah. So
the even users don't even exist? Like, is this because in what way does that help me as an end user get a better service?
yeah, the thought behind it is just more abstraction. When we support like 117 chains, Uh, if in that theory, there's two popular protocols per chain, we're already at over 200. So we don't even have some chains don't even have two protocols on it. Some of it is just the integration of the individual blockchain, like Cosmos based chains. A lot of them don't really have anything on that, other than the fact that you can get into that given blockchain, which is a pain in itself on Cosmos. But that's a different story. But that's kind of the idea, is that, like, we want to provide much more abstracted experience. We have seen some stuff where it's like it may be beneficial from an engineering standpoint to, like, for the automated side, not to do it for all 200 and all chains, and then focus maybe more on like the power law side,
The
essentially, like.
20% that serve 80% of the volume today.
Yes, exactly. But we have seen, like, also where there's been like some user demand or options. Like, what we're gonna probably test bed is like, is it useful to people? Like, is this something that people want? And, like, feel free to reach out if this is something that you would want. But effectively, a lot of where this comes from sometimes is airdrop farming. So if airdrop farming is like still extremely popular and continues to grow, uh, we support
Yeah.
something like Berachain, and then Berachain, we support all the protocols in Berachain, and then it's like, well, you can just automate transactions on that protocol to then kind of more or less like farm that. But in as terms of like actual user experience and becoming more of an extraction layer, it's like some of this, it does, to your point, kind of look like, well, is it actually beneficial for helping people generate yield via staking, lending, something like that, where most of the returns are on these some small subset of chains, where you'll see like much more maybe token prices, stable token prices, or maybe tokens that people want to actually hold for the long term. So
Yeah.
we're kind of focusing on that, trying to make sure we listen to users and just go where like it's supposed to go, but not necessarily. I think like by having this, we enable ourselves to have like a much better like payment experience and open up gateways and doors to like new opportunities. Um, but I think that, yes, to your point, like there's some of this where it doesn't make sense to do it on every chain, and they continue to say. Like, into the future, we may continue to support this and we may have advantages, but I think like if you look at, like, say something like I don't know, just say some new chain comes out later. Like, I don't want to upset anybody by saying any chain, but like if
Oh,
there's a new chain that comes out later and there's
yeah.
five new protocols on it, do we go and add support for that chain immediately? Do we add support for the five protocols immediately? Before it was yes, and so that's how we got to all these chains, is just yes. um, then it turned into like, well, how much usage are we getting here? Is it worth like really setting this up and then like maintaining this code over the long term? It kind of becomes some more questions. um, I think that you know some of what we have today is we just have so much that I think we're in a spot where it's like, we'll wait and see if this is worth like actually going and doing that. If people have enough questions for us to say, hey, go add support, can you add support for this chain, that'd be awesome, then we could go do it, and we could get it knocked out pretty fast. But I think that, like, in the future, we probably won't be as aggressive on adding all the chains unless like we see that there's much more reason to do so. But at least that's kind of our thought right now. Sometimes it wanes and goes in and out, because sometimes I'm like, oh man, like everyone's going to all these different chains, and we just hit a couple
Yeah.
buttons and we just support it. So it's
Yeah.
like it's a little different when we have like these agents to do stuff for us.
Got it. I'll share an observation, and then I have a question on the revenue model. The observation is that I'm sure you're aware Phantom recently announced a huge fundraise. I think they raised over 100 million or so. Big amount, right? My observation is, and as a user, I'm telling you my own experience as well, because I spend a lot of time in the trenches, both EVM and Solana, and so I end up doing a lot of transactions in a month or in a week, like, let alone a month. And so predominantly the platform that I use to do this is the wallet itself. The wallet interface itself, even though I know back of my head that they're actually charging me a take rate over and above what the swap fees are for any underlying protocol, I still end up doing that for the convenience of it, right?
Yeah.
And I've seen, as a result, there are many like me, lazy folks, right? And they end up doing it right in the wallet. And so the wallet is generating revenue, which which was unheard of, a couple of years back, but this has happened now. Um, Now coming to you know to a chat application, right? So if you look at the chat GPT, their revenue model is primarily a subscription based revenue. So it's true with Cursor, Perplexity, or any other solutions that I might use. So okay, a subscription revenue is coming in there. Now comes to Orbit. Like, how do you see you guys making money? Is it predominantly going to be a take rate similar to what I'm paying in a wallet for the transactions that I'm doing? But then I can just do, I think so far only a swap. Uh, but like walk through the ways and possibilities of how Orbit will make grow its revenue over time.
Yeah, the idea behind it is exactly that, similar to like the wallet convenience fee, more or less. We could do that on, but our focus is mainly on automated transactions.
Mm.
Some of what I don't like about the existing wallet stuff is that you have the fee, like the existing fee, then you have the wallet fee on top of it. I
Yeah,
feel like maybe this is a wrong observation, right? But I felt like the reason we got into DeFi was to stop with all the fees. But I understand that there's like a portion where you want to take that's like just finance. You take a small piece of everything that's like kind of anytime the money moves through, you take a small piece and then that's how like finance makes money.
yeah.
Um, but I felt like from a high level premise, a lot of DeFi, the exciting thing behind it was you could lower fees kind of across the board, and you could accept
Mm.
and keep more of your own money, which I liked and resonated with. Um, but I feel like
But
sometimes we're
how?
getting
How can we do
how
that?
I think like some of this stuff, like on our side, what we're focused on is we'll do the automation portion. So a lot of people are already taking fees on the liquidity pools and stuff like that, right?
Mm.
So I don't think that if we do our product right on V2, most of the transactions will be on automation. But if we're effectively powering an experience where what we are doing for you is helping assist you make money, then I think that that makes sense. If what we're doing is not doing that, then I think that don't want to do a fee. But um, on the actual manual intervention tasks, like we don't have plans right now to take a fee from there. Maybe we change that in the future. But at least right now, we don't have a plan to do that because, like, I think if we do our job right, most of the transactions for what most people will want to do is in the automation side. And then the actual transactions that you'll do for like a human intervention, kind of like what you would get from like the existing experience, that'll turn into something where it's like, okay, I want to do a swap here to here, but maybe it's because you just want to own that token or someone told you to buy the token or whatever, something else. Um,
Mm.
Maybe we end up taking a fee there, but I don't want to like
Mm.
I want to. I feel like there's like a balance. Like there's a balance where you can like effectively take revenue on everything, and you do really well as a protocol. But I think at the end of the day, you end up taxing users, and then that kind of sits in the back of their mind, where it's like everything you did got like a fee just got pulled off of everything,
And
you
I
know?
also feel like it's a race to the bottom because whatever you charge, somebody else
Yeah,
can make a better product and charge less.
yeah, and I mean maybe it's also like Robinhood. Like I think Robinhood back in
Mm.
the day, like they did a really good job. Going
Yeah,
from like effectively a brokerage account that had to charge a whole bunch of money per trade, and then I know they get money on the back end from like some
yeah,
other stuff,
they do.
but
Yes.
it's like
But
at
for the
least
end
the
you
user, I
for the
feel
customer,
good.
it's yeah, exactly. Yeah, this is exactly the model that a lot of these discount brokers in India use. So there is this company called Zerodha. They have never raised a VC round in their lifetime, Ryan. It's both the founders have created this unicorn multi-billion-dollar fintech company, and it's actually a case study in itself because it's the cheapest brokerage service available out there. It's called a discount broker. They process more volume in terms of stock trading that happens in India every day than like the biggest banks in India. And
Oh
so
wow.
yeah, so it's so I get your point. What you're trying to say that uh, simply by charging your user, you're actually hindering your own growth versus you know uh, figuring out a better way. And crypto offers you that because you have a token. Which brings me to the next point, which is the token itself. And I want to talk about it. Um, I want to talk about it more from a strategic perspective, and it's also again comes from my observation, both participating in the space and talking to a lot of founders in the space that I've worked on one-on-one with. A lot of them, when they launch a new product and they're at an early stage, they want to avoid launching a token because it brings with a lot of overhead, managing the community, managing their expectations, exchange listings, managing relationships with market makers. I don't know how many things go into launching a token, right? You would know more than me. And so, um, the other side of the story is they don't want to launch this token strategically because they think until they don't, they can create mechanics to drive community behavior, that come and use my project, and there is a possibility that you might get a sizable allocation and make free money as a result. And so the airdrops meta, which you spoke of, and here comes Orbit, and the first thing you do is launch a token in the meta. Talk about what were the trade-offs, what discussions happened inside the organization between you and the core team members when you made the decision that okay, let's do it. Right, what were the pros and cons that you did for launching versus not launching, and what made you decide this is the right time?
Yeah, so a lot of it came from honestly. So we've been working on this for a long time. Um,
Mm,
I would definitely say post launch, it's been really fascinating because yes, it is a lot of overhead, but it's also really interesting because prior to a token, um, we essentially would reach out to different protocols or different teams or whatever it may be and say, hey, like we should work together, or maybe they reach out to us or whatever, right? And um, it's kind of interesting. Like I feel like a lot of those conversations are much more easier now. Like I don't know if it like legitimizes you or something like that, and that's the reason behind it, or what exactly. But those conversations are actually far better, and the amount of outreach from like high quality projects that we have had since doing this has also like been substantial, which is I think is like honestly really cool. Um, so it's kind of like it comes with like it's a double sided sword. Like I would say that like it is a heavy piece for like comms, and especially when we did it early, like every single tweet was under extreme scrutiny.
mm,
Especially I think with our token symbol or whatever, right? Like everything was
yeah.
under extreme scrutiny. Um, we had some tweets where we tweeted out like one thing or whatever, and it was messaged correctly or whatever, and then boom, there goes the price, and we're just like and then we write a tweet real quick correction, it's like hey, like what the heck. Um, so like that was a very interesting learning. Like if I had to do that over again, I have tons and tons of thoughts around that and like
Mm.
how I would like recommend other teams to do that better than like what we had.
Why don't
Um,
you share a few of those ideas as well?
Yeah, I mean, I think like probably one of them is if you are super slammed, definitely get yourself almost immediately someone who can help manage your Twitter, or just some like a Twitter intern, somebody. Um, even if or have someone dedicated on your
Good
team,
advice.
because like for us, like I was writing a lot. Well, first it was like Chris was writing a lot of tweets, then I was writing a lot of tweets, and
Mm,
then now we have some people helping with the tweets. But like
yeah.
in the early stages, like I was staying up most nights until 4 a.m. getting 2 hours of sleep,
Mm.
uh, and then I would go right back to working. And the main thing that would hold me up, because like I've coded a lot of different
Wow.
stuff, is that like
Mm.
you know, I'm coding, I go heads down, I get like in like a zone, right? I'm just, going at it. And, and then it's like, oh shoot, I got to pick my head up and I got to tweet something, Um, so that was a interesting,
Mm.
thing. And then it's like, what do I tweet about? And it's like, I don't know. Like, do I talk about the thing I'm working on right now? Or do I talk about like a previous thing? Like, and I'm just like,
Mm.
so, um, that was a challenge. I think having someone help you do that, I think would be a huge plus, because then you get some
Mm.
at least some extra hours of sleep. In my case, uh, but um, yeah, I mean, I would probably say that. The other thing is probably I would also like if you're doing comms on stuff like it's almost like I didn't realize the amount of pressure on each tweet, especially
Mm.
in the early days. Like I didn't realize how much like gravity it held, right? So it's like you write a tweet, you say something, even on your personal account, everything's under a microscope. So it's
Yeah.
like I would say, like, definitely think through what you would post about or think about probably in advance, and then
Hmm.
kind of have some thoughts around it. So you're not that you're like filtered, but like just so you don't necessarily like off the cuff, on your way to go, I don't know, pick up
Hmm.
groceries or something like that. You just type something out and just send it. And then you look up, 15 minutes later and it was like, oh, that wasn't a good tweet. So
Yeah.
I would say, have some preparation with that.
Hmm.
Um, but definitely some really good learnings from there. And but it's I feel like it's like one of the weirdest things because we've been building in the space for over 3 years, and most of the 3 years it was like not that it was a challenge to talk to some teams, but it definitely has become substantially easier after having a token. So
Was that
as
the
much
core
as
driver? Like, but that must be after the fact for
no,
you. You didn't know that launching a token would bring in the
we didn't know
legitimacy,
that.
right?
Yeah, we had no idea that was going to bring that.
Then walk through like what was the primary thought process behind what incentives are we unlocking by launching this token? Was it primarily because I'm sure I don't know what the tokenomics are, but did you have an allocation? Because before, I'm not sure you can even do that in a pump fund launch. I think it's a fair launch platform. So you would just launch your token and you have to buy from the open market. Is that what you did? Just walk through those.
Yeah, so the tokenomics behind the token is there's 12% that is allocated towards team and
Hmm,
company and everything we do there. 2% goes to the actual liquidity. 5% is on liquidity. I believe 2% goes to community. Um, wait, did I say treasury? I did say treasury. The 5% for treasury, and then 3% for team. I think if I added that all up right. The idea behind the tokenomics is that there will be token gating and revenue, and then buybacks with the token.
hmm,
So effectively, we want to use it as an incentivization mechanism, and like more or less, like the thought behind it was like, could we effectively align incentives with folks, and then create something in which like maybe we have different features. Like right now, it's completely open platform, and the
hmm.
V2 we will actually be releasing a
Oh,
lot of
so
these
for
like
me to use these new automation solutions that you will unlock in V2, I need to have some Orbit tokens on me, and then I need to basically lock them in some contract or whatever in order for me to unlock those services. Is that
yeah
how you're thinking in terms of utility of the token, apart from the
the
buybacks, of course?
Yeah. For the thought process is more like a AI XBT model in which you have to hold a certain amount. Um,
Hmm.
so the reason we haven't done like some staking stuff is mainly around
Yeah.
like you know what is that considered? Like I'm trying to wait to see like what that kind of. I feel like we're so close to like getting some information around that. And I think today
Yeah.
SEC like dropped Coinbase's case for staking. Um,
Yeah.
so dismissed it. So it's like maybe we'll get some really good clarity there, and maybe we'll have some staking for some stuff later. But like right
Hmm.
now, our thought is just holding on that inside of the wallet that'll be used on the platform. We can then check
Hmm.
the actual balance and say, okay, hey, like if you're doing something like meme coin trading with this, we'll have a high
Yeah.
frequency use of the agents. We want to effectively limit,
Hmm.
effectively the amount of abuse we could have with that.
I also feel because you talk about AIXPT, I was one of the earliest buyers of AIXPT.
Very
And
nice.
one thing I recognized when I did that was I could not access the platform because I needed to have a sizable investment. I think at that point in time, I when I got in, it was trading at $500 million, and you had to hold, if I'm not wrong, I don't remember now, but it was worth almost $30,000 in
Yeah.
tokens. And so,
We,
because there is an actively traded market of Orbit and the price fluctuates, I mean, at your peak, you were almost at 160 million market cap, if I'm not wrong. It's currently at 30 million. So there is a difference, right? How much tokens do I own now or then for me to access services would have been very different. How would you make ensure parity that it doesn't like lock me out as it did to a lot of folks who were buying the AXPT tokens trying to access the platform, the terminal?
Yeah, I think that that is definitely something that we'll have to like kind of ensure we pay attention to. I'm as much as I like the just holding model from AXBT, I don't want it to be like you have to have
Hmm.
$30,000 of the token. I, I'm in like a couple different
I mean,
chats with
it
different
changes,
like
right? Like market cap changes, it changes how much you have to hold. It would be worth
yeah
$50,000.
yeah. I think at one point I looked it was like 350K
Yeah,
for like
yeah,
AXBT. I
at
was
its
like
peak, yes.
oh, like
Nobody's paying
as
that
much,
kind of money to access
yeah.
the terminal.
And I'm in some group chats, and
Hmm.
some of the folks in the group chat were like, "Who's gonna buy this?" It's
Yeah.
like it's a lot of money. So I think we don't want to do that. I just like the idea of like, oh, you just have to hold the token. So like we want to make it accessible. My first premise is that it would be mainly around the amount of automations that would go off in a given day. So essentially, we'd have some multiplier on that, rather it be 1 or 10. And so if you have like say 1,000 or 10,000 transactions go off in a day, maybe you have to hold 10,000 tokens. I
Hmm.
think that kind of in my mind makes sense because then it's
I think
based
there
off
should
the
also
actual
be some
utility.
economies of scale. Like if I am more active, I should be
Uh huh.
paying less versus if I'm less active, I should be paying more.
Interesting.
Like some reverse economics is
Some
also,
asymptote.
yeah, yeah, would be interesting because you want to get more users hooked, right? And so
Yeah.
for me, as you said, my cost has to go down. But if I'm using more and more and more, right, my volume is so much that you recover in terms of how much you make on in upside. Which is why I mean it's a very complicated way to think about what your revenue models should be. Uh, but I'm going to stop here and move to the next part
No,
of this podcast, which is,
no, I think that's super
se-
interesting. Like we could
yeah, I
definitely
mean,
like consider that for sure.
yeah, that I also feel like, just I'm just thinking from an end user. I don't like to use services which are bottlenecked in any sense. I want complete unlock, and then I can keep using those services, and I keep paying for whatever I'm using, right? So, but I don't want to restrict myself. There is you can also look at like. Uh, okay, up until a certain usage level there is a free tier, and then you unlock more and more
Yes.
by doing whatever. Also, I think it would be a very bad idea um, to not have a fixed amount, meaning if you keep it open like AXPT, I don't think it's a good revenue model at all. The reason why they have been able to sustain is because they had a first mover advantage in terms of locking a social agent which did what they did, and so they
Right.
garnered so much attention, and so their prices, even at 400 million market cap, the team had a decent amount of capital in the bank to do whatever they were doing. And so I feel like when it comes to solutions or services like this, think like the basic way to think about it is how a wallet operates. It's a wallet for me is completely free. The wallet is not taking any
Right.
explicit money from me. But I'm paying for everything that I'm doing in the wallet. It's happening in the back end, right? But everything is unlocked. So same way as everything is unlocked, I can prompt when I want. I can ask for whatever. I can interact with the social. As soon as I do a transaction which is happening on chain, that's your in. And so those. I think that in my head is something which is well accepted now in terms of what's the practice on how people make money in this space. Yeah,
Absolutely. We'll
which I
we'll
think is
always have
cool.
a free tier. Yeah, so we'll always
Yeah.
have a free tier, like something that people can access. I think the main thing that we've seen from the automation side that gets a little scary is that like
Mm.
there are definitely some people who use it to an extreme, and like if we were to effectively say like it was like I'm going to buy $1 and sell $1, right, something like
Mm.
that, the automation, like the cost associated with that, if they did it like say a million times in a day, ends up being kind of somewhat substantial in comparison to the percent that we would take off. So I think like we have to kind of
Mm.
balance that. So it's like we'll find something though, but we could probably talk about this like also after this because I think you have some really good ideas there. Like I think having an asymptote or like some top level limit is probably a really good idea. So we don't just like say okay this goes on to infinity,
Yeah.
because then that's like becomes inaccessible. And then
Yeah.
also like if the price goes up, the idea is we want more and more people to use this, not less and less as our price gets higher and higher. So we
Correct.
probably need to kind of figure out something with that as well. The main thing, though, around token gating is to provide utility while also limiting abuse. So that's
Mm.
kind of what we're trying to balance there for sure.
Mm. Okay, I want to segue into the competitive landscape and also the moat. I know Daniel Sesta, he recently got into the game again, made a name for himself with Time in Wonderland, two very successful projects in the last meta, if you remember. And now he is back
Yep.
with Head on. which I think is a direct competition to what Orbit is building at this point. Walk me through how you look at the competition in the DeFi abstraction layer. There's a bunch of teams who are offering this chat interface, and they have the LLM. They have the same things. They're integrating all the protocols. You write a prompt, you're able to do a transaction. So I hear a lot of like commonalities between solutions. What's your strategy to win and differentiate, and how do you look at these other products in the market today?
Yeah. So for Daniel, really quick, I used those products back when those were around the last time. Uh, so I definitely was a part of, I guess, like the Frog Army at that moment or whatever. But so it's kind of cool. He's coming back and doing stuff.
Mm,
But yeah, I mean, we definitely are like competitive in that sense.
yeah.
How I look at it is like a lot of people are building very similar products, which I'll be honest, like when we were doing this over a year ago, like
Mm,
we were the only ones doing it, and it was very hard to talk to people about this stuff because a lot of people didn't
mm,
know what agents were or anything there. So as much as I want us to be the only people, the only game in town, I'm actually very happy that there are other people building because like now the conversation is like, well, what do you think about it? You know, that kind of thing. It's not about like why would
it's
anyone want
no
to do
longer
this?
about whether we need this exactly. It's now about
Yeah.
what has to be true in the product for it to win, which is a
Yes,
different
exactly.
conversation.
So I'm really happy that there are many folks building in
Mm,
the space.
yeah.
How I look at ourselves is like we're very much so focused on that abstraction layer, and
Mm,
then our main thing that kind of the key insight that I continue to see is like from a first principles like analysis is like what are you using an agent for to do this stuff, and that's kind of what I'm like more rooted in. And so originally it's like okay, it drops the barrier, and I think like as I've continued to build in this, it just becomes more and more abstraction because
mm,
really like the agent is this like smart, intelligent thing that's not really a human or it's not a human, but it's like this intelligent thing to help you do X, Y, or Z. Rather, even outside of crypto, it's like to help you build a website, design something,
yeah.
go market your product, like sell your
Help me
product. So
write
you
code.
have
Mm,
help you write code. Yeah. So it's like really what you're looking for is the intelligence layer. So if you're looking for like the intelligence layer, okay, then what can we do with that intelligence layer and reasoning capability to actually assist the user? And that's kind of where we're kind of focused on now with the V2 portion is that you'll
mm,
still have all the abilities that you have today, but with like the chat interface. So if you want to do like interventions or you want to do something like directly, you can. But then I think the main thing behind it is like actually the automation, the further abstraction automations, kind of like what we talked about earlier in the call or podcast is that like essentially uh, identifying risk tolerance, abstracting much more of the user experience. I think that's really what you're using the agents for, and
mm,
adaptability to like current circumstances, new data, new information, and just like adapting to that versus being like something that's very static and just sits there and does the same thing regardless of what's happening on the outside world. I mean, just my own personal learning when I did the Bitcoin trading bot a long time ago,
mm,
like I was mainly looking at like data associated with the price, and I was identifying like effectively like a LSTM is originally an algo designed for video. So it was like to predict the next frame in a series of frames. So if I'm moving my hand across, it would predict that my hand would go to the next one. And so I was
mm,
trying to look at like short term and long term like price movements, and then try and like actually have that be something that would like uh, be used to identify like what would be the next one. And I just use that on like a reinforcement side.
mm,
But yeah, it's just I think the agent portion, like inside of that, what the problem was that the algo did not have outside data in combination with the inside data, and it could not reason across. Like that's what I would do if I was sitting there watching the algo trade and do its stuff. And I was like, oh, hey, like, such and such said something on the news and Bitcoin's going to tank or it's going to moon. Like, I could then influence that. But like, if I'm not sitting there, it kind of
mm.
loses that reasoning. Now, today, it's like you could have the algo trade plus have the reasoning capability there via like an agent that would take in the outside data sources. So I think there's like, I don't know, there's a whole bunch of reasons why you would do the agent, but that's kind of how I think about it.
Yeah, but like everybody is looking at the meta from this angle, right? So I think the air race will be won at the app layer by those folks who have the most proprietary like unique data to build more customized agentic solutions on top. So if that's how you win, and when you look at the current landscape of all of these different projects, where do you see, like, which teams do you see as your like biggest competitions from that standpoint, and what is it that you're doing now to ensure that moat, that you continue to work on your mode and that it becomes stronger and stronger, because this is going to be a winners take all market, just like the wallets or dexes or lending. Like the top three projects have pretty much 95%, 80 to 90% of the market share. I don't see any reason why this should be any different.
Yeah, I mean, I think like just looking at the price, those are some of the folks that we mainly look at for stuff. Um, I
Hmm.
think that when we're looking at kind of who's across the board that does stuff that's like really good, I think those are probably the main folks that I've seen. I'm really curious about another project coming out, like a Wayfinder. Like I'm curious how
Hmm.
they'll do. A lot of people have
Yeah.
talked about them. I haven't had a chance to like try it, but like I
Hmm.
imagine like, I think it'll. It's kind of weird, but like I kind of am looking forward to when they come out as well because I think that they will breathe like new air into this industry. I think it's like for me, I believe this is like the future. Like I think like agents are the unlocking technology. Um,
Yeah.
but I think that like just having something else come in that has a stage just to stand on helps.
Yeah.
Um, and so I'm looking forward to some of that. I think that from just seeing more broadly, those are probably the people I mainly look at for like competition. There's lots of folks that are building in this space. I think we'll continue to build in this space. If like chains or different groups create like SDKs, there's a lot of
Hmm.
folks that essentially take that SDK and then just deploy a chat GPT wrapper over that
Yeah.
SDK. So we've seen a lot of that. I don't really look at too many of them because I don't feel like they're differentiated any. I feel like it kind of like stops there. And it's kind of like you have like Uniswap, and then you have people who fork Uniswap. Some forks actually end up like being very useful and like are heavily used. There's a lot of people who forked Uniswap that like didn't really do a whole lot, and then they continued. When that was the meta, they just launched a whole bunch of
Yeah.
it, and it's like,
Yeah.
well, it kind of didn't move. So I kind of look at those the same way because they're taking something that's open and just dropping it and seeing what happens. Um,
Hmm.
but yeah, like I think those are kind of the main people I look at.
Got it. Okay, I want to segue again and talk about the larger AI meta. And I don't actually want to step outside of crypto rabbit hole for a second. There
Okay.
are now new models coming in, right? Which with each new model you have better reasoning capabilities, and the benchmark tests that they do, science, math, and statistics, and what else, coding, right? Um, each of these new models are improving their scores. So Grok recently, I think just this week, they announced their results, and they were doing. They had better scores in comparison to O3 or O4 or whatever. Then DeepSeek came; they had their own results, and I see this capability of what these models can do is improving by the week as more and more computers available, as more inference is happening, more training is happening. I'm sorry. And so how do you see this meta in terms of the models that are being built there um, impact the agents that are being built? Is the agent layer independent of the underlying models, or would there be a time when these agents would be kind of tapping into many of these independent, like idiosyncratic models and their capabilities to create, like, modular melded solutions which offer the best of, I don't know, these different models? So how do you see that game evolve, and how does that change impact your business?
Yeah. So for all the different models that have been being created or that are coming out, I think that it's honestly very exciting. I think when DeepSeek came out, I mean, the stock market crashed. Like, everything was like, oh no, like what's going on? I think it's
Yeah.
Jevons paradox. Like if the
Yeah.
cost of inference actually goes down, I think we're just going to use more of it. So I'm
Yeah.
kind of looking at this like from an electricity standpoint or like a water standpoint. Like if you have like running water, like I think both of those. is kind of how I'm looking at this. Is like it's just a new like utility, if you will, and it's just intelligence, and it's like intelligence on tap, kind of thing. And the cheaper it is, the more we're going to use it. So when a model like DeepSeek comes out and they have a very new, they effectively like borrow different bits and pieces from different open source model creators. So they had a mixture of experts in there that
Mm,
came from like Mistral, like a French company. They actually were one of the first people to do that. Um,
mm,
so they reduce the number of active parameters at any given time to only a specific set versus the overall larger set, which
mm,
reduces your compute requirements. And I think that like that's really smart. So it's like, but I don't think that that would mean that we need less chips in order to solve this stuff, because I see the curve in which we are using this will just continue to accelerate higher and higher as the models gets better and better. So if we figure out methods to reduce the overall compute requirement to run a given model, I don't see that really slowing down the need for like intelligence, like effectively the use of it in applications. Um,
mm,
so when each of these new models kind of come out, I think it's really interesting, and it really is just us because if there's a newer model today, we support 40 something models.
mm,
So we have a wide range of support, both open source, closed source type models. Um,
mm,
and I think that uh, any new model that kind of comes out that beats the previous benchmarks, that is better at maybe logic or reasoning or math or science or coding, it's like it's really just better, I think, for everything kind of across the board. So I get really excited
mm,
about a new model release. Like I saw the Grok 3 come out, and I think they're probably doing some really cool stuff. A lot of people are really excited about the speed of it. People are doing great innovations around context windows. So you have larger and larger context windows, which is honestly like a really needed thing, because if you don't do that,
mm.
you have to use a separate like memory store, like a RAG. So you have to use like a vector
Yeah.
DB or a graph database. You do have to do a whole bunch of stuff. And I think the for most use cases, like probably larger context window makes a lot of sense. People will probably create stuff, I think, over time in which maybe the transformer is the paradigm we use, like the base underlying architecture. Maybe people change it. Like there's been a few different attempts already on figuring out different alternative architectures that may offer some benefits.
Mm,
So I think we'll continue to iterate on that. But the thing I think is quite interesting is that somebody after DeepSeek launched used DeepSeek to improve itself and then effectively made it 50% faster. I think that the model companies I think are doing some of this probably internally, but it's probably like kind of under wraps. But I
mm.
think once we turn that on and we just kind of let
Yeah.
it do its thing, it's going to be crazy. So I'm uh, I'm both excited and scared a little bit for that moment, but I think that's where a lot of firms are kind of headed towards. But all of this is just beneficial
Interesting.
for agents. Yeah. So like
Yeah.
agents will sit on top, they'll use this.
Mm,
What we
mm,
have been building effectively is the integration across all these different protocols and the coordination between it. So we have like I call it like our knowledge engine, but it's
mm,
effectively like a Google Maps for identifying protocols for different blockchains and what you want to get done. Um, so the model that sits on like underneath and where all of our stuff sits on top, like I think our stuff just improves if that base model improves. It's just a better
mm.
foundation for the house we're building.
Yeah, yeah. And what do you think about this? This whole wave of other companies in the DEA meta, those who are building like specific AI chains, companies like Talus Network, those BitTensor, which offers all of these like different subnets with their own unique data sets, and then you have Flock, which is trying to do decentralized AI training. Where does all of these experiments that are happening on the crypto AI side fit into the overall puzzle? Because I feel like when those guys are already building the models and they have access to sophisticated tech capital and talent, how can you even compete on the other side of the table? And so what if it's just a plus one value add? Is it even worth doing those experiments? And just like what's your take, and how do you see this other meta outside of agent space, but overall like DEI category, these different projects, how do you evaluate them, and what role do you think they will play in the expansion of AI and the adoption of DEI?
Yeah, so I think so when we were originally building like the surface area, so a while back, a
Mm,
lot of people were focused on, and I think it's a really good thing to be focused on. But it's essentially, instead of being how does AI help crypto, which is kind of where we're focused, it's how does crypto help AI. So it's like an
yeah.
inversion of that like thing, right? So um, when we look at that, like I think that it is going to be necessary. What we've seen so far from users is some of it has not been needed, but I think that that's just a today thing, not a tomorrow thing. So
Mm,
I think a lot of this will creating incentives, creating competitive landscapes,
mm,
creating collaboration in an open source way. Like I think all those are really great opportunities, and I think that that is where we'll see a lot of, and we're seeing it right now in like just models. Like if you just look at like foundational models, like open source used to be 12 months behind or over 12 months behind like closed source, and they have rapidly caught up. And I think that they I don't know, but in my opinion, I think that they could surpass at some point because they're just
mm,
iterating so quickly. You have effectively millions of people around the globe able to look at this, iterate on it, make some kind of change, create a new model, and the rate of innovation and pace there is like pretty insane. And so I
mm,
see that the open source mechanism, creating competitive landscapes, data capture. I mean, there's a lot of projects that have done essentially pulling in different data sets. So rather be from Twitter, um, or Reddit or whatever it may be from online.
mm, mm,
I think like companies like Grass is doing this. Like that's really helpful. Um, I think you kind of have it across the board. Federated learning is really important. Actually putting this on chain, having agents coordinate there, I think it's really important. So like we've done some partnership stuff with like Talus. We've done some different things with different folks, and I think that those are definitely going to be needed in the long term for sure. I think that what we'll probably see is like you have, I think it was Prime Intellect. They did a really cool thing where they did like this distributed training thing, and doing experiments there I think are foundational to enabling this kind of to bleed into the future. And so creating a incentive layer and a mechanism for people to actually cross coordinate, I think is like super important.
But do
Um,
you think they will be able to compete on the scale of the investments that are going in, on the other side with these traditional companies? Because all of these, the big tech giants are backing one of these companies. Amazon is behind Anthropic, if I'm not wrong. OpenAI is
yep.
completely backed by Microsoft, like billions of dollars. Same is the case with XAI, which is backed by Musk. And so DeepSeek seems to be like an aberration, but they also have they have a hedge fund which was running and profitable for the longest time, and I'm pretty sure they made money on the market crash that happened with Nvidia as well. At least
Yeah. You
that's
see
what
all
I
the
read.
memes, all the memes about it, like shorted Nvidia or whatever. It's like, okay. Like what the heck?
Yeah, yeah. So the point I'm trying to make is like, yes, it's all cool. It's great to see that the user federated learning and decentralized AI training, or BitTensor with all of these different subnets, each having like their own unique machine learning models, or the intelligence that you can tap into, um, is an interesting value play. But do you see them kind of posing a competition, or will open source AI and the role of especially decentralized AI, would they get to a point where they'll achieve critical mass that they break out of the bubble and start serving the larger markets as OpenAI does, as Anthropic does? Because the real world outside of crypto, they're only talking about those projects. I am yet to see BitTensor being covered in mainstream media, or near AI being covered in mainstream media, or anything that's happening in our world going out there. Apart from Bitcoin, there is hardly anything. Of course, Solana and Ethereum, but that's it. But
Yeah.
AI, when we talk about AI in the real world, in fact, go talk to my friends outside, they would know about OpenAI, and they are probably a user of ChatGPT, but they don't know
Mhm.
jack shit about BitTensor or even Orbit or any of these solutions. So how do we break up? How do we get to that point?
Yeah, I think that that's a really good question to ask. I mean, for me personally, I think I'm kind of biased because it's like it's uh I always look at it as like, which world do you want to live in? Do you want to have it where there's like a few overlords that kind of like filter all your information and kind of, this is like, you know, it used to be you go to the library and there'd be like 1,000 books on a subject. Then you had like Google, and then you know, you go to like a given website and it's like, oh, like these search results are what I'm looking at. If you just ask the model, like I could totally see that in the future where like you just ask the model, that's where you get all your information. Like that's where a lot of my information comes from. Um, and the search feature is nice where it adds some like grounding in their stuff. But I feel like I hope, you know, personally that open source decentralized AI has a place there for sure. So like, if not the place. So I'm pretty biased on some of that. I think that, you know, it's a very tough question to ask, like when that will happen, because I think it depends on like hardware requirements. It depends on, because like certain models like
Actually, I
DeepSeek,
think
I think are unlocked.
it was a very bad question on my part. The real question is, how do we get there? Right? What has to be true in terms of the work that we need to do, the investments that we need to make to get there?
I think the how is like uh, also. I mean, for first thing that comes to mind to me is like I think we're doing a like, just from what I'm seeing, like the data acquisition stuff, like so like platforms that
Mm,
acquire data, I think that's actually doing a pretty good job. It because like then you'll end up with like unique data sets across the board. So like even for I forgot the company, but they effectively acquire like car data, which I thought was super
mm,
interesting because my dad's background coming from like airbag stuff. Like there's a company that's in crypto that essentially pulls in aggregates of like car data, and you can have like an OBD2 connector that connects into your car, and it could pull in all this information, and it's like a DPIN product. So I
yeah.
think that's pretty interesting, stuff like that, because then you end up like really unique diversified data sets, which would then be beneficial into the future for future models, rather it be closed source or open source. Um,
Mm,
when you actually have like, I think competition, I think that always breeds better stuff. And I think crypto is a very good way of incentivizing competition and
mm,
consensus mechanisms. So I think that you'll have something come out of it. The how, I think, is a question personally. Um, I think that there's lots of compute that's on this like decentralized system. So like maybe it'd be like IO.net or Akash or something like that. And a lot of those are, or like hyperbolic, like a lot of these are like underpinnings for like, I think, allowing these models to be used, trained, or whatever, hosted. So I think that's there. Some of the use behind it, I think, is personally, maybe it's just like the barrier of like crypto. Like if there's like a crypto barrier, maybe that's part of it. I had some people I knew that got acquired by NVIDIA, that were originally based in Austin, and
mm,
they did some things where essentially they abstracted the use case effectively of going on some decentralized compute. They just offered it as a single option in there that was in
mm,
tandem with other like cloud providers. It was just the
mm,
cheapest option. Um, that ended up, I think, having lots of use, but I think like discoverability is one problem. So like
mm.
maybe that erodes away, but I think that's probably one thing. It's just discoverability outside of breaking outside the walls of Web3, and like just kind of reaching across, I guess, like the aisle or whatever, and grabbing like Web2
Yeah.
folks would probably be
Yeah.
huge on that.
Yeah, I feel like, kind of, as we come to the close of this podcast, I will reiterate the whole idea that we need to drop jargon and we need to communicate in the language of the consumer. And so that's the largest gap. A lot of consumer projects that I personally interact with. In fact, I'll tell you, like the last season of our grants program, the entire focus was to fund consumer crypto. And so I met hundreds of teams. I personally went through at least 500 applications. And so the products that I looked at, the ones that are doing really well are A, regional, right? They focus on a geography. And B, they are communicating what they do to the end user, they have clarity in their heads as to who that person is. They have a clear persona of who this guy is, and they know what language he speaks. And so everything in their application is communicated in that, in a way that he gets it for him. And that I think will essentially bridge that divide. So yeah, got to drop the Java and understand what he really wants, and then build a solution that actually works and offers that value better than anything else out there. And that's how you take crypto mainstream. You will not take crypto mainstream by asking people to go read about the blockchain. I mean, we spend so much time geeking over on crypto Twitter on this consensus mechanism versus SVM versus some other virtual machine versus Move. Nobody gives a fuck.
Yeah.
But we are obsessed with this idea that we keep
Yeah.
talking about blockchain. My blockchain is better than your blockchain. Dude, nobody cares.
Yeah.
All
Exactly.
right. On that note, Ryan, I want to thank you first. I think it's been almost an hour and a half, and I want to bring this podcast to the close by letting you, drop a nice call to action. If there are folks who want to partner with you, what's a good point to get there? For folks who want to try your product, what's a good way to access it and try it out? And yeah, whatever other message you might want to leave the
Cool.
community.
Yeah, yeah. Really appreciate being here. Thanks for doing this. And yeah, if you want to partner or do anything on that side, please feel free to reach out to me on Twitter. It's Ryan McNutty 33 is my handle, and then or to our company account Orbit Crypto AI. And then if you want to try our product, it's at chat.orbitcryptoai.com. There's links on Twitter and stuff to get there too. Um, and yeah, if you're interested in trying out like a effectively V2 or having an early alpha version of that, please reach out. We have some different signups around for that. So we're definitely interested in getting people to get their hands dirty and try it out. And yeah, I'm really excited about having our upcoming V2 launch come out, and really excited to get people to try that.
Awesome. And with that, we come to an end of this podcast. Thank you guys for tuning in today. I hope you enjoyed this episode. I know I did. Everything that Ryan just covered in terms of the links and the URLs will be available in the show notes at the bottom of this video. With that, it's your host, RSC, signing off. Thank you so much.